Dan came from nothing, immigrated to the United States, and started living the American dream. Accumulated enough capital and properties to get himself to be in a really good position to leave his W-2 and focus on his real estate, which is what he does full time today. So there's a lot of nuggets in this episode you're not going to want to miss. Patrick, what did you think about today's story with Dan?
Man, as always, I feel so motivated and inspired. The American dream is alive and well, and Dan is the primary example of it. So make sure you listen to the end. He's got some great nuggets all the way through. We got a bonus question right before the big four that I know all of you guys are going to love. And here it is.
Dan, why don't you go ahead and introduce yourself and tell our listeners a little bit about what you've got going on?
Hey guys, thank you so much for having me here. I'm just excited to share my story, to your listener. I mean, I don't have a huge portfolio like some other guests that you have in your podcast in the past, but it's just more about the my story that that I can share, and I think that your listener can find some encouragement and they can take their own start to take their own deal.
Exactly.
So yeah, just like any other immigrant. So I left El Salvador. That's where I was born and raised. And when I was 15 years old, somehow I ended up in Kentucky. I don't know how. I took the journey, the young age, and then I was here with one of my older brothers, and then one day realized that he was gone and I couldn't find it. So I was in down by myself. And then that's where the journey began. I had to find a way to start working and make some money and to survive. So then by the age of 18, I got a job at the local manufacturer here, and I stayed there for a company for 16 years. 16 years later, I would say maybe about 12 years later, I found bigger packet, and they were talking about a specific subject about how to create wealth through real estate. And I was like, what? Can that be possible? Can you buy a property? And the resident can pay for it, and now at some point your property is free and clear. So yeah, that's how I started consuming as much information as I could about investing in real estate. And fast forward. So currently I have 7 proper, 2 long term, and 5 midterm rental. So that's my new niche. That's what I've been doing lately.
Dan, you've got a history with you, my friend. I mean, coming from El Salvador, starting a new life up here, kind of having the family separation going on, and then building up a portfolio to what it is today. Very, very impressive. I kind of want to go back in time a little bit and talk about kind of your departure from El Salvador, because that, is a huge transition to make, and to make it all the way back up here to the States and to get yourself to where you are today. So, what kind of led to that transition from living in El Salvador to being here in America?
I wish I had a specific answer, but it's just where, unfortunately, and El Salvador is, third world country. There's a lot of poverty out there. Like if you were born poverty, the chances that you will, accomplish something, it's very hard. At least back then, 30 years ago, or so. I remember since I was little, I refused. Even I didn't have nothing. We didn't have nothing. We were poor, and I refused to work at the farm. I thought that that's not what I wanted to do. That was not for me. I knew that that was the only option that I have at that moment, but I refused, and I feel like I believe that there was something better out there, that I could do something better. But unfortunately, the resources that I had were very low, and I just that kind of led me to take that danger journey. So yeah.
And I kind of want to hone in on that a little bit, because there's so much talk about in the news today about the American dream. And already what I'm hearing is that the American dream is live and well, and anyone can actually come here to the United States, work hard, and be able to build up, significant wealth by working hard and doing the necessary things that you need to do. And we haven't even gotten into your story yet, but I just wanted to ask you, do you believe that the American dream is still alive and well here in our country?
I mean, absolutely. I mean, the dream is still alive, and for those who are willing to make short-term sacrifice to have a better life, better options, and in the future. I mean, yes, it's easy. Say I want to, own like a apartment complex, all right, but there's just a process that go before to get there. The way that I look at it is like me, I'm a runner and I love to run. And sometimes when I pass the 6 mile, I start getting tired and I feel like I want to give up. Because that's how it happened, at least in my journey in real estate. It's just like no, like sometimes instead of focus where the finish line is, I just focus where I'm gonna put the next step, or the next step, one step at a time, and eventually we'll get there. So yes, anybody can, if anybody is willing to make short-term sacrifice, you will be very rewarded in the future. So absolutely, still alive.
I feel like that's amazing. I know a lot of people get bogged down in trying to develop this big picture, big goal, this grandiose plan, but they forget to take the small steps, the next step, the most immediate step to get towards that goal. And I think that throws a lot of people off. So I think there's an important lesson there in just taking action. You can have a general idea of where you want to be and what you want to build for yourself, but if you're not taking those small next steps, despite how hard it is in the moment, you're not going to make any progress. So, I want to fast forward a little bit to your first deal. What occurred in your life where you really thought like real estate is the next thing that you need to get into? I know you had mentioned bigger pockets, but
Mhm.
what else was going on in your life, and then transition us into your first deal and what that looked like.
Well, I was, let's say, I worked for the same company for 16 years, and but everything, my mindset changed everything when I read the book Rich Dad Poor Dad. Of course, everybody have read that book, and I was working for this company, and I was well known in a company, and the company was very good to me, but it was more like they just want me to stay there as long as I could because they knew I was one of the best workers, and just something that I had done. I did I mopped the floor in the past, I washed dishes, but I always believe that you have to be good at one thing. At everything that you do, just become good at it. It doesn't matter if you cleaning the floor or washing dishes, just become the best dishwasher. All right, because if you don't focus on those little details and become good at what you're doing, then the chances that you're going to be good once you do a bigger deal, it's kind of unlikely. So just it doesn't matter if you're just doing one little thing, just become good and then move to the next one. So that's kind of it. And I just didn't like uh, the idea that I have to be tied up to work all the time. I just uh, I knew there was something different out there. And of course, I was investing in the stock market and I was doing well because I started in 2011 when the market was down. So, and I was like, there are other ways out there to invest. You don't have to trade your time for dollars. So how about if I trade my time for result, and what can I do? Then my wife and I, we decided that we want to invest in real estate, and we started learning a little bit more about real estate. We didn't know nothing about. I didn't even know how to use the tool to do the work. I had to Google. Uh, so yeah, and that's when we bought our first deal in September 2019. We bought our first property. So that was a life's changing from that point on.
That's amazing. So, okay, so a little less than 4 years ago is when you bought your first deal.
That's correct. Yeah.
All right. Now let's dive into that and like what was this first deal and remind everybody where it is, so we can get an idea on price and all that kind of stuff. Let's walk through this a little bit.
Yeah, of course. Yeah, so actually my first deal was in a not the most desirable neighborhood. It was cheap because our budget was only $100,000, and in Lexington, it's $100,000 don't get you too much. So, and we found this property that was on the market, and that I liked the property, but I went pending right away. And then a few days later, came back on the market, and I called my agent and I was like, "Hey, let's just go and take a look at this property." So the property didn't need too much work, and it had a huge backyard, and it was across from the school, and so I was like, let's just put an offer. And I was nervous, so I was like, they were asking 95K, and I was like, no, let's offer 98. And like we all went over asking price. Of course, they took the offer, and but the good thing about this property is until this day we still own the property. So we paid 98. We put about 7,000 in work. It didn't need too much work. We rented out immediately for like $1,000. Our mortgage was only like 400 or something like that. Then with the cash out refinance later on, we pull out I think 19,000 in cash. We reinvest that money in another property, and fast forward this year, the tenants that were living there, they trashed the property so badly that I had to end up putting another 10,000 or about 12,000 in to get the property back on track. So, but I expected that was going to happen at some point. But the good thing is that where now I do midterm rental. Then one day, one of the nurses that had rented one of my property in the past came back to Lexington. Instead of go to Furnish Finder and look for a property, contact me and say, "Hey, do you have a property? 'Cause I'm thinking to come back to Lexington and I want to stay for a year." I was like, "What? A year?" I was like, "Huh, okay. How about if we made a little bit more investment, put furnitures in it, and we rent the furniture." But I was concerned because he might get scared because in order to get to the property, he has to go to a some kind of sketchy neighborhood. And I tell him, "Hey, here's the address. Take a drive around. Let me know if you want to live there. I made the investment, buy the furniture, and you can move in." And he said, "Yeah, it's fine." So he said, so he moved in. So he's gonna be there for a year. And of course, I refinanced the house. Now my mortgage is 734, but he's paying me 1,900 and rent. So I'm profiting close to 900 pure cash flow after I pay the mortgage, taxes, and insurance and utility. So at the end, it was not a trashy house. So yeah, that was one of the best deal that I had done. Of course, I had some other, but it just worked out really well. And this is the key point that I want to say is that we're always going to go through those hiccup, but the point is just not to give up. Not to give up, instead of just pause, take a moment and see what we can do. Maybe there is a better solution. Which problem, I mean, probably the problem not always a problem. Problem is an opportunity to find a solution and see what we can learn from it. And then we can correct that in the future. So yeah, it was good.
Exactly. And one of the things that I love, and we've heard this so many times, is that usually people's first deals end up being their best deals when we talk to them. And majority of that reason, I think, is because of time.
Yeah, absolutely.
Because at the time when you bought it, you put a tenant in there that was paying $1,000 a month. Here we are 4 years later, and now you're getting almost 100% more than that. You're getting $1,900 a month. And like you said, you had someone trash the place, but you thought outside the box. Plus, you didn't just buy that one property and see what happens. It sounds like you started getting some more, so you had more experience. So when this problem happened, you had alternate solutions in your head for it. Hey, should we switch it to here? Should we switch it to here? You've already built up a relationship with this person, so now you reposition this asset and basically like doubled the value of the property and the rents and the cash flow, which is insane.
And not mentioning that I just recently last week, I think we got the appraisal because we're getting line of credit on that because we can't refinance because we have a low interest rate. So it appraised for like 215, which I was like, what? I paid 98, then I appraised for 215. Of course, the rehab cost, but still, it's it turned out to be great. So yeah, that's what I like.
I was going to say, it's always about time in the market, not timing the market. And real estate is one of the best examples of how to make time work to your benefit. And you've built an incredible amount of equity in this property, especially over the past couple of years. So I think that's fantastic. With regard to that first tenant that was in there, or the tenant at least that caused all the issues on their move out, was that tenant in there for the duration of the time that you bought the property until they left? So were they there for about 4 years?
Yes, they were the first one that rent the property. They were doing good in the beginning, but they just started having problems, and then they were like late, and I was just trying to be a nice person and just kind of let them get, well, yeah, that's fine. You can pay me like half now and then pay me half later, or like I was I gave him a chance to help me to do some renovation and other property just because I was going to hire someone anyway. I was trying to help in every way I could, but I think at the end, I was just trying to do too much to help them, and they were doing so little to help themselves. And that kind of got me in that trouble. If I would have been stick with, to my contract and just like, well, I can only help with so much, but this is the best that I can do. But it would be different. But I learned something. Now we're no longer doing that, so we just stick with our, what our contracts say. So it would be like that.
It sounds like you manage all of your properties then yourself.
Yes, I do because this is kind of my day job, really. I'm no longer working my W-2, so and we have twins, 6-year-old twins and 4 years old. They keep me busy too, and I take them to school and pick them up. So it's hard for me to have a day job and manage all that. And my wife worked for for Toyota, and she also travel. So it would, I can't keep a day job. So yeah. And because the cash flow that comes in from a property, it covers for some of the expenses too. So.
Exactly. And you don't have to pay out that management fee to a third party too. So that's additional income coming in for you to support your business and your family. But let's dive into that landlord-tenant relationship because I know when people get into real estate, their first inclination when they run into a difficult tenant is to try to have a soul and be reasonable with the tenant, which is a very reasonable thing to try to do at first. But I think, after you've been in it long enough, you start to learn that sometimes the tenants see it as more of a financial arrangement more than the landlords do sometimes, and they'll take advantage of it. And they're not going to be upfront all the time, and you're going to have these issues. So it's certainly it's a fine line between trying to extend courtesies of paying half now, half later, or understanding whatever circumstance might be with a tenant, whether maybe they brought in a dog halfway through the lease without telling you, and they have some sappy sob story to let you know why they need the dog or something. But, let's walk through that a little bit about how you've kind of progressed in the original way that you would interact with your tenants to today and how you interact with them now.
Well, of course, everything changed since that incident. So now we remodified our lease, and before they sign the lease, we go over through the entire lease and explain and make sure they understand what they signing on, not just to sign just because they need a place to live. We explain our expectation from them, and we let them know what is our duty as a landlord, that we want to make sure to provide a clean, safe place for them to live. But at the same time, uh, once the due date is expired, then late fee will we apply. We want to make sure they understand all that, and we haven't had any problem so far. Well, part of that's because I do midterm rental, and I'm dealing with different type of customer. If they don't pay me because they don't want to pay, but they make good money. But with a short term, a long term rental that we have, we make sure we explain them. And the properties that we buy, we do full renovation. We fix everything up front. We do all the investment up front, because I don't want them to calling me all the time because something is leaking and something is now it's broken, it's not working. So we just don't get those calls. I believe that if you do the work up front and you are careful who you're gonna choose to live in your property, not to choose, but who can meet the criteria, the qualification, then you will be much better successful in your real estate journey, because you took your time to do all your homework upfront. And that means by fixing the property correctly upfront, and make sure that you picking the right residents that are gonna be living on your property.
Exactly. I have to second that for sure. I think that is one of the biggest things. I know there's a lot of people out there that just try to buy a place and then, do the landlord specials and, maybe wipe it down, hire a cleaner, and then just throw it up for rent, and
Yeah.
we run our business the exact same way that you're running your business. When I'm buying a property, the only time that it's going to stay in the condition that it's in is if I am inheriting tenants,
Mm-hmm.
until we come to an agreement for them to leave. So then I can go in and renovate the property. Other than that, we're starting renovations right away, because that's the same thing, when you're managing these properties, the more you do up front during that initial turn, during that initial time, handling all those issues right then and there, that alleviates hours and hours and hours and a lot of dollars and headaches down the road when you have somebody living there and now everything is an emergency, instead of giving you an extra couple weeks to handle that all in the beginning. So I love the way that you're running your business, and you're actually running it as a business instead of a hobby, which I can tell right from the beginning of this conversation. So you buy this first property, you get it rented. How long was it from the time that you got the first property rented until you started looking for that next property?
It was about a year in between. I was continue doing my day job. I left the company that I was working for 16 years, and of course, I did not know what I know now. I said, well, I had so many experience working in a manufacturing industry, and because I went from being a team member making $8 an hour to be making $30 an hour, fast forward. I got promoted to be a production supervisor, and I was able to participate in all the training that Toyota provide to their team members. So, and I was like, that should be easy. I can just go there and get another job. Well, guess what? It didn't happen. Why it didn't happen with that? Because every time I would go to interview, even they were very impressed with my experience, but I was missing one thing, and that was high school diploma, because I do not have a high school diploma. And I was like, why? I meet all the criteria, and like one piece of paper does not make me more intelligent than the less intelligent than the person who have it. But I understand that's the process, and that's the system. And I was like, well, now I have to grow this real estate portfolio. I cannot screw it up because it's clear that if I mess up, I would be in big trouble. So a year later, we bought another property. So same thing, we fixed it up and we rented out right away. It didn't take that long. It just gets rented, just has so much demand here. And that's I think in 2021, we bought three. We went from two in 2 years. In 2021, we bought three. I don't know what I was thinking, but now looking back, it was a good decision. That's for sure.
That's right. That's right. I think that's important too, is I love asking the time between the first one to the second one, because some people are like, oh, I bought one and then a month later I bought another one,
Too
and
fast.
you guys did kind of what we did as well, was like, hey, we've got it, it's rented. Let's just see how this whole thing goes. Let's make sure, the rent payments keep coming in, see how often we're getting phone calls and all of that. And then it kind of starts to work itself out. And you're like, okay, hey, this isn't half bad. And then you bought the next one. Was the next one in the same area, around the same price, or did you try to go to a little nicer area and spend a little bit more money? Like, what was your thought process on that second one?
Well, on the second one, it actually is in the same neighborhood. It was just a little bit more expensive. We pay 100 115K, and we put little bit more renovation on it. So like it's kind of like every property have been little more expensive and little nicer and nicer neighborhood. So yes, we in that. I said, I don't want to buy no more in this neighborhood. I want to switch to different neighborhood and see what happens. So we're no longer targeting that neighborhood. We had three so far out there, but now when I was working on my third property, which we pay 160,000. Then one of the real estate agents that I've been, keep in touch, contact me and say, hey, there's a house that's gonna go in the market next week. He just trash it so bad. You probably don't want it, but if you want it, then come and look at it. So I go out there and look at the property. I'll go through a neighborhood. I'm like, what? This house cannot be trash in this neighborhood. It's a nice neighborhood there. So I went and looked at yeah, it was. The garage was full with garbage. They had accumulated all the garbage from when COVID kicked off uh, in the garage. They didn't took the garbage out, and they didn't pay the rent to that lady that was buying the property from. And it was so bad. I had to hire a cleaning company to come in with a hazmat suit and just take everything out. But I got that one for like 53,000, and I put maybe 10,000 on it and rehab, and a travel nurse moved there. She stayed there for 15 months, and she was paying me 1,900. So it was like perfect.
That's what I like to call a home run. Do you have any idea what that property is worth today? You spend 53, you put 10 in renovations, that's 63, maybe 5 for furnishings. So let's call it 67. What is that particular property worth today?
Actually, we refinanced early in the year or last year, I think, to reinvest profit, and I appraised for like 215. But now, recently this year, we did another appraisal, actually a couple weeks ago, and appraised for like 240 now. So yeah, so we still have a big gap in between that we can play with it. So yeah, that was I would have to say most of my deal that I had done, it has been a great deal. Just because we didn't go and buy in a neighborhood that, yes, the property is cheaper, but you probably gonna have a hard time finding a good resident that's gonna want to live in your property. And then when you want to sell it, you also gonna face the same problem. So for me, I'm not big. I don't want to be the one to say, oh, I have X amounts of unit. So for me, it's not just about the amounts of unit that I have, but the units that are in great neighborhood and good around good school district, and that can cash flow good, and also the appreciation on the outside. That's what I'm focusing on. Even if I go slow, that's okay, because I don't want to go from 0 to 30 in a short period of time. So it's just, it would be hard to manage if I don't have the experience.
So a lot of people face that same challenge. It's the penny wise, pound foolish, investor starting out mindset that kind of gets the best of people, because they're always looking at cash flow opportunities, and they're looking, I want to buy this deal for X amount. It needs a cash flow, an arbitrary 1%, and then anything else is kind of outside of the buy box. But I think after you have time to develop as an investor, you start to realize location matters a lot. It matters for your sanity as an investor. It matters for appreciation. It matters on turnover. So there's a lot of elements that go into it. And it sounds like you've gone through that phase shift of, oh, we just need to buy something we can afford to get started, to now I know what I'm looking for. I've got my criteria. I want to buy in a good neighborhood, and have something that can appreciate in value over the long term. So I think that's absolutely incredible.
Yeah, that's one of the reason why we did a transition from buying in the cheaper neighborhood and move into a much nicer neighborhood. Because, and the reason was because I don't think I won't be able to have that much success that I have now doing midterm rental if I would have been in those type of neighborhood. In fact, most of the nurses that stay at my house, they said, I asked them, why do you pick my house instead of the other house? Because there's so many houses available also. And they said, well, they all say the same thing: neighborhood and how the property is presented. Like your property is more in the leisure style, but it's still in a much better neighborhood. So that's it, and I don't invest in real estate just for my niche, what I'm doing. I invest for long term. And I know that even if the midterm rental stop working on my end, then I can still convert it long term and it's still cash flow. Yes, it's not going to be the same, but it still has somebody else payment for my mortgage. So I want to have several exit, in case that something happened, and I want to make sure I'm safe.
Exactly, exactly. I'd like to dive into the midterm rental and kind of just get a basis on where did you learn about it, and then what made you, we know, kind of like you switched your strategy from long term to midterm, but what were a couple of the pros that you saw with midterm for those kind of considering a midterm rental, because we know it's pretty popular now, as well as short-term rentals. So, what was it really that sold you on moving forward with midterm? And then what advice would you have for anybody out there looking to maybe get into midterm?
Well, honestly, I did not know anything about midterm rental. I was listening to a podcast. That was way before. No, I think after I bought our second property, and someone was talking about renting a basement to a travel nurse, and they were talking about how much cash flow they were getting each month. So, and they were talking about this platform, Furnish Finder. So, of course, me, I like to say that when something that when I want to learn something, I find a way to learn about, regardless of what it costs. I just want to know when I find out what that is, and that's how it has been my whole life. Um, like, so I started Googling Furnish Finder, and I found that platform, and but then I started asking questions from other people. No, nobody can give me a specific answer about. So It took about 6 months to make a decision. So, that's when we bought a third property, and I thought, well, this could be a good one just to try. So we decided to put furniture up there. We didn't even buy nicest furniture. It was just like simple, just because I didn't know what I get into. But I said, well, if if I don't, there's two options that I have. So if I don't try, I'm not gonna know what I don't know now. But if I do try and if I succeed, then I gain knowledge and I can do a little bit more, depend how it go. So that's how I started doing that. I don't even have friends at that time. I didn't have friends at that time that invest in real estate or that do midterm rental. I think, but then it was just I didn't hear much about midterm rental really, and until when COVID, was like full speed, and then people started doing those midterm rental. They will like rent anything really. So, well, guess what? So that had changed. It's not the same anymore. Yes, there's demand, but now people don't want to stay, in grandma basement, because it's just like so dark and dated. It's not, it's just not attractive. People don't want. People are looking for a much better property, something that's more dated, clean, nicer neighborhood close to the hospital would be ideal. Not necessary because my property they're not close to the hospital. I think the closest one maybe 2 mile. So yeah, it's still demand, but you have to be more creative now. So you have to present your property like you presenting like to like you're gonna rent an Airbnb. Of course, it's not gonna be like gonna go crazy and buy pool table things like that because you don't need that. But just make it looks nice. Oh, and of course, uh take professional photo. People think that they by taking picture with their phone, they're gonna get a nice traffic. It doesn't happen anymore. So some of my nurses, that's what they say. They say, though the picture were upside down, the pictures are so dark. They taking pictures of the drawer where they have the silverware, and there's only 3 spoons in there. So I might need more than three. So yeah, no, I don't. I don't take pictures of what I have because furnish means furnish, and you must provide all the things. And think about like if you will be traveling, what would you like to have in a furnished house, right? So that's how I think, and that's how I design our property to
Well,
put it there for.
talking about furnishings, it sounds like the first one might have been done on a shoestring budget. Like you're testing out the waters, you're making sure that it's a good fit for your portfolio and for your business. But on average, for each subsequent midterm rental, about how much does it cost to furnish a property? Like what are you looking at putting into the property? What types of things and just what's the overall general cost of furnishing a midterm rental?
Yeah, the first one, of course, we went the cheapest way, and then later on, when that nurse moved out, I find out that cheaper is not the best way to go because we have to replace most of everything there. So I think right now my budget is like between, depending on the size of the house, between 7,000 and 9,000 and furnishing the property. Um, eh, Most of my properties they're like 3 bedroom or 4 bedroom, 2 bath. But because most of my customer, they're either a couple or one person, so I only furnish 2 bedroom because I don't want to do the investment up front, and they're just not gonna they're not gonna use it. Now I have people that have contact and say, hey, I need 3 bedroom. Okay, that's fine. Then I furnish the third one. On my description, I put that so make sure they know. So yeah, it depends how you want to present your property. You can spend up to $10,000. So yeah. One thing that I've been doing also, like if the house is near the park, so I've been even adding bicycle too, just in case the nurses want to get out and ride a bike, and I'm no extra charge. So I just put it there. Put outdoor furnitures. Grill. I've been putting grill lately on all the properties because I mean sometimes you want to just go outside and, cook a hamburger or something. So I just want them to feel like they're at home. So that's the reason
Exactly.
why the average of them, they stay between 5 months to 10 months. So because they keep
Wow.
renewing their contract. So yeah, not just like short term. It's more close to the long.
Wow. That's
Yeah.
amazing. That's amazing. Now, do you only utilize Furnish Finder to find your midterm rental guests and tenants, or are you using any other platforms out there? Are you posting on Facebook? Are you using Airbnb, but only with a minimum of 30 day or yeah, minimum of 30 days, or is it strictly just Furnish Finder?
Actually, I have 5 properties, but I only had 3 on Furnish Finder because the last 2, they were already booked before I even complete the job, before finish the property. Because the nurses also, I have I give them a referral bonus. So I want them to talk to them to other nurses, either the people that they work with, or maybe some friend back home, maybe someone's moving here in the area and they contact me. So the majority of the nurses that have stayed on my property, they come from referral. So I have to turn down so many people requests from Furnish Finder because when they contact me, I already have made a commitment to somebody else. So no, I do advertise on all the platform that I forgot how it's called. Um, LA house, temporary house solution, something like that, I think it's called. That's just for like insurance claim relocation. When someone had a house burned down, then they need a place to, to go for a period of time. So they also so advertise there too, and also working with my local insurance company. So I just let everybody know what I'm doing. So because if one thing stop working, then I have some other option. So, but no, I honestly I don't even use Furnish Finder as most people think that. So no, luckily for me, the nurse helped me to bring the next um, resident to my house.
I think that's totally key. I mean, you've niched down into this nursing field a little bit. So I think the more you can get new tenants by word of mouth, the less you got to spend on marketing and the less commission you've got to get to other people. And you can do the referral thing and it's really going to generate more business. I think that's amazing. And I think that's a great time for us to kind of transition to where you're going from here, Dan. So you've got 5 midterm rentals, you've got 2 long-term rentals. Where do you plan on taking your portfolio from here?
Well, for now, so of course I would like to do a little bit more midterm rental as long as keep working for me. But I just want to make sure if I decide to do it, have to be the right property. If that doesn't work, then I can still convert to long-term rental and still be cash flow. I want to I've been recently started working on looking at like a small multi-unit, like a fourplex, eightplex, and something small that I can still manage myself and not gonna take too much of my time. Um, I don't want a huge portfolio. I just want to have good quality properties and in a neighborhood that can bring good cash flow each month. So my target is to bring maybe 15,000 a month in cash flow. Um, that's my target for now. So I not maybe halfway in there. So it will take a couple more years, but sometimes you only need one deal. And I can help you to expedite the process. But no, I don't want a huge portfolio. I just want time. I want time that I can spend with my kids. My kids are young. They want I want to be part of their life. I don't want to be the guy who is just working all the time and not being in my kids' life. And of course, I want to retire my wife too. So that will be, the other goal that I'm working toward.
Does your wife have any interest in joining you in the real estate business, or is this kind of just your thing that you're managing, and then she's got the stable income with her job for the time being.
Oh no, absolutely. She want to come on board. But she have a very good paying job, so we're not at the point that she can step out. But no, she actually, because we both work in the business, like I manage all the contractors and I do some of the work myself also. And she do when we furnish the property, she's the one who do all the design and buy all the furnitures, and then we put the furniture together. So yeah, she worked a day job and still working and helped me to grow our business. So yeah, so we work as a team. So hopefully in the near future we can get her out her day job, and then we can both maybe start traveling a little bit more. So
I love this. I love this. Before we dive into the aspect of the team and working with your partner and your wife, I wanted to highlight something, while we were sitting here. So your guys' goal is about 15,000 a month in cash flow. I think you said right now with your 7 properties, you're sitting right about 7,000 a month, right?
yeah.
So is that 7,000 a month more than what you were making at your job of 16 years?
Oh yes, absolutely. I mean, actually, I have a good pay job too. I mean, for a guy who doesn't have high school education, I mean, when I left my job, I was making about 85K a year. I mean, come on, people don't want to walk away from that for the job, but that was a trap for me. Now looking back, I was my hands were tied up. So yeah, that was absolutely. I mean, that's just like pure cash flow, but we reinvest back in the business. We don't use that to live. That's how we're able to grow our portfolio, because we live a very we don't live a fancy lifestyle. We're still living in the same property that we bought short sale in 2011 that we haven't even do any work to it. My wife's complaining about that, so I gotta start doing some work because she's not happy. So she said, "You keep buying all the property, don't fix my house." I said, "Well, because the other house is bringing, money, and this one is taking money out of our pocket. So let's just hold on for a minute. Come on."
That's funny. That's funny. But I love highlighting that because within less than 4 years, you have been able to build a portfolio that now surpasses what you were making at your W-2 job. And, you see a vision forward. You worked there for 16 years to get up to being able to make that amount of money every year. And within 4, doing it on your own while working for them, you were able to surpass your income. And now you have the freedom to be at home with your kids, to manage your business. And I'm sure your work-life balance is significantly better than what it ever was while you were working there.
Oh,
So, I mean, go ahead.
yeah, absolutely. It's just so much easier now. I remember back in when I was still working my because I didn't just left my day job. We were buying property, and I left my job beginning of 2021. January 2021, that's when I left. But before that, I was still working my day job, but it was just so hard because after work, I have to go and do work at renovation at the house. And then on the weekend, I have to spend the whole weekend. Then we'll bring our kids to the construction site and it was not easy. It was hard, but you just can't, you can't give up. You just when things start getting hard, that's when you find yourself, like who are you, who you really are, what you capable of do, what can you accomplish, did you believe in yourself, that's the most important thing. For me, I have to believe myself, because I feel like that's the only reason why I'm here today. If I would have stayed in El Salvador, probably wouldn't even be alive. So no. So but I believe that there was something out there better for me.
Let's talk a little bit about your partnership in your business with your wife, because I know a lot of people, when they get into real estate, it's a lot of times it's one person kind of leading the charge, take down a couple properties. Now the partnership of the marriage is kind of like, wow, this worked, like there's some things here behind all of this, and then that gets everybody on board. But talk to us about your relationship specifically with your wife. How do you split up some of the tasks with the business, and what do you just tell us about that, the relationship with your wife and the business?
Yeah, basically, like I say, I manage the property and I manage the contractor when we have something under renovation, and then she managed all the financial side of the business. All the stuff I'm not very good at it, so I just trying to find the things that I'm good, that I like, and the things that she's good and that she like. And then that's how we decide that, well, this is your portion, this is my portion. But now that I have more time, so she have been like helping me a little bit more to understand the side of her portion. That way I can help her more, that I can take some weight off her shoulder. It's just because it's the right thing to do at this point. So yeah, we have, and she support. I mean, she's the only reason why we invest in real estate, because she's the one who told me like, you got to listen to this podcast and like you're gonna learn something good. So you go and listen, because she's the one who taught me how to invest in real estate also. I mean real estate and stock market, back in when we first met. But and then I realized that I didn't like her investing style, because she was more like a Dave Ramsey, mindset, which is a good thing for beginner, but not for the people who want to create long term wealth. So yeah, and from that point, I just took and I started doing my own thing and doing my own investment. So, but yeah, we do have a very good business relationship. Every now and then, I give her a nerve, but she get over it.
Yeah, I love that. I think it's interesting when you have people with different financial mindsets come together and try to build something. And
Yeah.
a lot of times it's, sometimes you get the Dave Ramsey follower, and then sometimes you get somebody who, just spends all the money. And then sometimes you get someone in between who's a good budgeter, but wants to do riskier investments. And, it's always interesting hearing how those financial personalities come together to create wealth for the long term. And, a lot of times it's give and take. You got to learn to grow with another person. So that's just part of the plan and the path to financial independence. But I want to ask you this question, because I think you're going to be a great person to answer it for the listener. If someone wanted to get into real estate, what would you tell them to do? What should be their first step to getting into real estate and building up a portfolio that can provide them with some passive income to take care of some of life's expenses?
Well, I believe the first thing that someone should do, that to invest in yourself. uh whether it's just reading book, listening to this podcast, or other whatever you want to learn about. There's just so many free education out there, and if you had the heart and desire to learn about whatever is what you want to learn, you can get that information. But also, once you can just continue reading and listening to podcast. At some point, you have to start taking action. You have to start taking the next step. And you know what, if it's buying one property, that's the next step. It's fine, go ahead and do it, because the first one will teach you the things that you did not know. The first one not gonna make you rich, and not gonna help you to quit your job. Is that just the foundation? That's just the beginning, and you will be able to see the things that you can accomplish if you continue, and that as continue working toward that goal. But yeah, you have to take action. So that's what I will have to say, for someone that want to start getting into real estate. And go to a real estate meetup. I mean, there's just, one thing that I learned when I went to my first real estate meetup, like you are in a group of other investors, but I feel like the people out there, they're just trying to share information with each other. It's just like you meet a stranger, but then you start having a great conversation about real estate. It is not the same conversation that you're gonna have someone, while you are happy hour at the local bar. It's a totally different. So yeah, go to a real estate meetup. So yeah, Thompson resource out there. Great information.
Wow, I love that answer. It's so amazing. We say it on the podcast over and over and over again. Decide, commit, take action. The one that's the hardest for everyone to do is the taking action part. And that's the one that they need to hear the most is go out there, take that action. You're gonna get some lumps, you're gonna get some bumps, you're gonna get some bruises, but you're gonna learn all the things that you really can't learn unless you just do it. You'll think that you've consumed all the information, but a lot of the times that knowledge really doesn't sink in until you're going through it and you're going through that situation. So that's absolutely amazing. And I love that so much about the meetups. We talk and talk about them. And you are so right. The conversations that you can have at these meetups are so much better than trying to talk about this with your friends and family that just don't have any idea of what it actually takes and what you're actually going through. So I think that's really amazing. And with that being said, now that you have talked about, someone that is just getting started, what they should do, I kind of want to ask you, what obstacles do you see yourself facing over the next year, 2 years to grow your portfolio to that $15,000 a month goal that you have?
Well, yeah, basically because we have been investing our own capital. We own 100% of the business. I invest my own money. That's kind of what have slowed down a little bit at this point. And also we have to get some our taxes in order. That was the other another different story, but gosh, we did not know did not know it was a mess. But recently we just got a line of credit on 3 properties that we're gonna start using to buy more properties. So what I would like to do is just to flip one house, sell it, get more funding using hard money lender, and then basically buy sell one, hold one, sell one, hold one. And it eventually that gonna help me to just continue growing my portfolio. But I remember one time when I was trying to buy my first property, I went to a lender and meet with a loan officer, and I say, just send me your personal financial statement. So we send all the documents. Then they later call me and say, hey, did you realize that you don't have money to buy a property? And I was like, I'm not sure if that's true, but how did you come up with that idea, with that information? He said, well, he said you only had $10,000 in cash, so we require that you have to have the cash in our bank in order for us to move forward. I said, but I have 180,000 in my 401k. He said, oh no, how dare you trying to touch that money? Did you realize that that's money for your retirement? You are hurting your future. Don't do that. Did you know that? Like he was like talking to me like I was some kind of ignorant, and I was like, I do know, sir, but look at me now. So yeah, now looking back, I was like, this guy was just so scared. But yeah, because that's what most people do, right? Like you don't touch that money, but again, take action. But so yeah, I'm hoping that we will start accumulating more properties in the near future, and we can hopefully in the next 5 years we can get to that goal. So
That's amazing. And I definitely see you hitting that goal, through all the adversity that you've gone through, just keeping your head down and going after it. It's an absolutely amazing story. I do have to dive in onto a little nugget that you dropped here on us because we have been hearing about these line of credits. It sounds like you were able to score line of credits on 3 of your properties. Was that through like a portfolio line of credit? Is that a business line of credit? Let's dive into this a little bit because I know me personally, I'm extremely interested in this, and I'm sure a lot of the listeners out there picked up on that too. How were you able to get this line of credit on these non-primary resident real estate assets?
yeah, so basically you have to find a local bank, community bank, credit union. Those are great. That they will able to help you with that. And the way how, at least I'm just gonna speak for my own case. The way how we got the line of credit was that yes, it is on our business, the property on their business name. So they don't do on the line of credit is not based on the appraisal value of the property. It is based on the cash flow of the each property individual. And because all those properties are midterm rental and the cash flow is greater than long-term rental, so that's how we were able to get $170,000, I think, line of credit, which it was kind of disappointed because it's kind of low. I was hoping to get more, but that's how they were able to help me at this time, because the value of the three properties were all the three properties combined were 868,000, and I was like, we can get more than that, but they said no, this is what we can do for now. So, but yeah, community bank and credit union. Those are great, and they're offering to any other investors out there. So yeah.
Perfect. That's a little bonus. That was a little bonus question we had to throw in there before we move on to our next segment of the show, because I know a ton of people ask about how do you get a line of credit on these rental properties? And there it is right there. You can go out. Someone just closed one for 170 grand right now during the interest rates and everything else. So banks are still doing it. Community banks are still doing it. You can go out and do it too. You just have to take a little bit of action and put in a little bit of hard work to make it happen like you were doing. So this is a perfect segment into our next segment of the show that we call the Big Four. James, take it away.
All right, Dan. So tell us and our listeners something that you do that's a financial independence cheat code, something that is a hack for generating your wealth.
Something related to, sorry, I think
yeah. So like something that's a cheat code for generating wealth or just helping you in your personal finances, something that either you or your wife do together to save money, make money, whatever it might be.
Yeah, I think for us, what helped us, we started investing in the stock market back when the economy, back in 2008. Actually, I invested in 2004, I think, and then I lost most of it in 2008. But from that point on, I mean, our portfolio just kept growing and growing and growing, not because we know what we're doing, but because we just got it at the right time. So that's how we were able to get away from the fear, like don't touch that money, you're not supposed to touch it. And once we have our homework done about real estate, and then we just use it. I use, my wife has not touched anything, but I use the majority of my money and put it into real estate, and that's what helped us to be able to grow our portfolio until this day.
Love it.
I love it. Again, time in the market. We say it over and over again. Time in the market. All right, Dan, we call this next one resources. So are there any particular books, podcasts, or people that our listeners may not know about, may not have heard about, that have really shaped your real estate investing and your financial independence journey?
Yeah, I listen to podcasts every single day. Of course, that's how I find you guys. And books, of course, the book that changed my mindset was Rich Dad Poor Dad. The Millionaire Next Door, Think and Grow Rich, and How to Win Friends and Influence People. I mean, those books are really great. And of course, when you invest in real estate, now you are some kind of leadership position. So I like books that teach about leadership, because when you have a proper under renovation, sometimes I always go your way, and then you just have to find the way to manage the project. So those are the things that help me my personal real estate journey.
I totally agree. And look, sitting right here next to me for all of those that are watching, Self-Aware Leader by John C. Maxwell. Basically anything by John C. Maxwell, dealing with leadership and people is absolutely great. And you are 1,000% right. And I wanted to piggyback off of that is once you start getting into real estate, start putting yourself out there, start managing these properties, you are becoming a leader, whether that's a thought leader, whether that's a leader in your circle, in your network of showing people, you know, that they too can become financially independent, financially free, and build the life that they dream of. And you are the leader. You're the sounding box off of that for being able to help them out and show that. So I love that answer, and I just wanted to piggyback off that a little bit. James, number 3, sir.
All right, Dan, it's 5 years in the future. Where's your business? Where are you personally? Paint that picture 5 years in the future of what your life looks like, either on the business side or the personal side.
Yeah, like I said, 5 years from now, we would like to be, my wife and I would like to be traveling more as well as next year. She said she want to go to Costa Rica. So she wanted to move to another country. So our kids, even I speak Spanish and my wife also speaks Spanish, but we haven't been able to teach our kids Spanish. So we need to work on that. But yeah, we would like to be traveling more, spend time with our kids. That's what we're working so hard to create a life that we don't want to take a vacation from. So that's what we want. We would like to be spend more time with our kid. That's for sure.
I love that. Create a life you don't want to take a vacation from. That's perfect.
That's right. It's all about that time freedom. Not once in there did you talk about money. It was all about time. And that's what we're here on this podcast to do. So, Dan, with that, for all the listeners out there that are inspired, that are motivated, that are definitely now more educated than they were before they listened to this, where's the best place for them to reach out to you, tell you about all the great things they were inspired from, and just follow along on your journey?
Well, I'm not a big time social media, like most people out there. Maybe I should, but I don't do too much. I do have a Facebook page and Instagram. Instagram is Daniel Saravia. That's just my Instagram name, and Daniel underscore improve enterprises on Facebook. So, I get a message all the time, and I'm trying to respond as quick as I can. But yeah, I don't do too much. I'm not a good dancer, so definitely I can be on TikTok. So. So yeah, that's where yeah, people can find me. So if anybody want to
That's great.
reach out and ask questions. So midterm rental, any other stuff. So I like to provide information to other people because like I know how hard it is start by yourself, no mentors, no one around that you can go and ask a question whether you're making the right decision or not. So I understand that. So it's hard sometimes.
You guys do it. You guys know it. Well, go follow him on Facebook or Instagram, whatever your preferred method is. So you guys know the drill. This podcast is free, but not quite. All that we ask you to do to give back is 1, leave us a review. 2, like and share this podcast. Send this podcast to somebody. Whatever your favorite episode was, pass it off. Share this with us. The audience is growing. We have over doubled the amount of listeners just this year alone. So we all thank you so much. Make sure to send James and I a DM telling us which one of the podcasts was your favorite episodes. Share this along. And as always, we'll see you guys next time. Peace.